Hi everyone, my name is Hayley and I run the accountancy division of Hive Business. I wanted to take a little bit of time today to talk about the payments on account system. So the accountancy and tax world is ordered by payment and filing deadlines, and there's actually one coming up for most people at the end of the month. So there's a personal tax payment that's due by the 31st of July. So as your accountants, we try and make that as kind of simple as possible. So we'll remind you when you need to pay anything, remind you when you need to file anything, but we also do our best to prepare you for the amount of any tax bills so that there aren't any nasty surprises. So one of the tools that we use with our clients is cloud-based bookkeeping. So most of our clients use Xero. And it basically just gives us the visibility we need to be able to advise on not only how much your tax might be, but also how to make it lower, how to optimize your position as well. So if you operate a limited company, your company will pay corporation tax, and it's actually quite straightforward for you to be able to calculate what your corporation tax payment might be. So Xero will enable you to run a report at any point in time, which will show you how much your company has earned in profits. There's just one corporation tax payment a year, and it's at a flat rate 19%. So broadly speaking, a good ballpark is to run your profit and loss, see what your profit is. If you've got 100k profit, you can be pretty sure your tax payment's going to be around 19-20k. However, if we look at how that compares to personal tax a little bit more complicated. So firstly, there's two payments that are due each year, not just one. And secondly, it's not a flat rate percentage. There are different percentages depending on what the source of that income is. Is it rental? Is it dividends? And also how much your total income is. So there's bandings that come into play with personal tax. Coming back to the payments on account system, HMRC introduced this many years ago, and their definition is each payment will be half of the previous year's tax bill, and payments are usually due by midnight on the 31st of January and the 31st of July. So any fluctuations in profit, and particularly increases in profit, have a really can be unexpected and nasty impact on your tax bill. So if we accept that the payment on account system isn't changing and it is what it is, what can we do at this point to kind of best prepare ourselves for it? So my first bit of advice is to save in real time and not to the payment deadline. So what I mean by that is each month, if you've earned £10,000 that month, you should set aside in a separate bank account a fixed percentage of that for your tax. We can help you to work out what the right percentage is for you, because it will depend on kind of a few different factors. But the point is that you've earned the money at that point, you've put it to one side, leave it there, and then by the time the actual payment deadline comes around, you should be covered for what you need to pay. The payment deadlines for personal tax and for corporate tax are so far remote from when you actually earned the money. It's really easy for you to spend the money you should have set aside for your tax bill, and then it kind of all comes home to roost when the payment deadline comes around, and then you end up spending what you should be saving back for tax at that point to pay kind of previous year's tax bills. So it kind of starts a vicious circle. My second tip would be to make the most of your limited company. So if you operate a limited company, you actually have the choice on what your personal income is going to be. When you take a dividend, you have a choice in when and how much you wish to draw. So because you're in control of that, we work quite closely with clients to set out dividend plans. So you know exactly in advance how much you're going to draw from your company, what your personal tax bill is going to be on that. We can make it the same year on year, so you don't have those nasty fluctuations which result in kind of high balancing payments, and also means that we can make sure that you're not tipping into any kind of nasty tax bands. So you're paying the most efficient rate of tax that you probably possibly can as well. And my last and final piece of advice is just to get organised. So we kind of, although we have those 9 months before you have to get anything filed or pay anything over to HMRC, doesn't mean we have to kind of wait up and kind of work to that deadline. At the very least, kind of get information to us as soon after your financial year as possible, just so if you have got a chunky balancing payment to make, it's better to know kind of 6 months before you have to make it than a week or so. But more than that, kind of engage with us throughout the year. So we're able to kind of see what you've earned for the year to date, forecast forward, what we think you're going to earn, and then make some recommendations on what you can do. There's very little we can do in hindsight. It used to be quite common for accountants to kind of look back to previous years and apply a pension contribution or something like that, but the tax world's changed now, so everything has to be done in real time. So we're more than happy to look at interim information for you and kind of advice from that. So hopefully that was a very brief summary of payments on account, but hopefully that helped. Any questions on how this affects your specific circumstances, then please just get in touch. We are happy to help. Thank you.